everybody. Welcome to the Closing Beat. Happy Friday. Joining you from the Speakeasy here today. Excuse me. It's our sort of bar there. If I pull this back, you can see drinks on the shelf there for anybody that needs them there. If you made it through this week, you did good, right? You did good this week. We had historic drops, and now today a historic rally. So I hope all is going well out there, and you didn't sell yesterday, marking the bottom, at least as of now. This is a quick show that we do called The Closing Beat. We're financial advisors here at Jazz Wealth. We just do things a little differently. We're big on education. Last night we did a class for customers, the 4 things to make the most out of this decline, and I don't mean just simply buying more discounted stocks or anything. We went in great detail to go over what you need to do, and I've just been swamped with the number of people that are actually taking action, so I love it. Good job, all of you guys that are customers of us here that are taking action with the things that we talked about. It's going to pay off, right? It's definitely going to pay off. These are the little things that nobody tells you. I don't even see anybody talking about it on YouTube, actually, publicly. So that's going to help your dough in the long run. I'm really big on that, right? I'm not just a guy that invests for you. We use our own portfolios and everything. I'm a guy that actually wants you to grow your dough. I want you to grow your net worth, and whatever it takes, whether the market's going up or down, I'm here to help. And nonetheless, this is not a marketing pitch today. This is a stock market update show. We do have some homework here, though. We've got a winner. Guess the Dow, by the way. We're playing a game, that Guess the Dow, jazzwealth.com/Guess the Dow. And every Friday we announce the winner, the closest without going over. Our winner this week is not a customer. Michael Baker guessed 23,001 penny, 1/100th of a point. So 23,000 even, 0.01. Michael Baker is our winner. $100 gift card headed your way. Just need you to respond with your address. We'll take care of it. If you want to take a shot, you have until tomorrow about lunchtime to guess where you think the Dow will close next week. If you're the closest without going over, we'll send you a $100 gift card. Or if you're a customer, of course, we will credit your account $100, particularly the Roth, if you happen to have a Roth. So that's that one there. Hope all you guys want to play. It's not a marketing pitch or anything. There's no games being played there. We just playing a game, right? There's no marketing games or anything. Our Jazz Artist of the Week, we'll finish up the week. Snarky Puppy is our Jazz Artist of the Week. Very interesting group, a very talented group of people. They've got a song called Jambone. If you want to listen to something rather interesting over the weekend, there you go, Snarky Puppy. All right, here we go. Markets, this is really interesting, actually. So you got the Dow higher by 1,900, let's call it 2,000 points on the day, nearly erasing all of yesterday. You got the S&P higher by 230 and 672 on the old NASDAQ. We're just throwing around hundreds and numbers and thousands on the Dow as if it's no big deal. But a real significant bottom here in the market, at least in the short term. That was a really aggressive rally that we saw off the lows. Volume was good. People didn't walk away for the weekend. So really interesting. I think it adds a little bit of excitement for next week for sure. But there's the S&P there. What I want to point out, the Dow, there we go. We take a look at the Dow. Last night was a really active night. It's not like we were up the whole time. Let's take a look. If you go back overnight, we had sold off all night. We were down over 500 points on the Dow. And then in less than 1 hour, the Dow rallied 1,400 points. Less than 1 hour. I was looking at the screen. It was like 200, 450, 625, 700. I'm like, this is just killing it. I've been just going crazy here. So we got a little bit of action overnight. And of course, you know what that led to today. The markets were largely back and forth throughout the day. But then at the end of the day there with the press conference, Trump coming out, that's when we really started to pick up some steam. So very interesting and active overnight session if you happen to be following along. So there you have the Dow there. By the way, the Dow and the NASDAQ outperforming the S&P 500 today. What you have? Max fear, right? That's probably the key word that people will use. You just say max fear at the lows yesterday when everybody's panicking, even you. Right? You know that's a little bit of a sign of a bottom there in the short term there. So really cool. You got Washington working on plans here, support and everything for those affected by the virus there. It's really minimal right now in terms of what they're doing. And I think that's because they know what's coming. You got Disney World closed, for God's sakes, right? They closed the whole parks, all the parks. I got nothing to do this weekend because they closed them. So when that happens, of course, you know, they don't close Disney, right? So you got bottom line numbers going to be affected for companies. You got earnings season starting in 3 weeks. So I think Washington knows, like, we're not going to go too hard and heavy right now because we got earnings season coming up. All these companies, we're going to get to see exactly how this has affected them. Not the obvious ones like the cruise lines and things, but you get what I'm saying there. Today finished up a record day for the Fed. Yesterday, they put $500 billion into the market, did some bond buying there. Today, they finished up with another $1 trillion, $1.5 trillion there, plus 60 billion more in repos, although that went well. That's going well, the repos there. Not as much action as there was. So looking good there. It looks like the Fed's kind of helped us out here in the short term. Although they don't get to go take a break and go on vacation, the markets are expecting 3 to 4 rate cuts next week. They announced the rate decision on Wednesday at 2 o'clock. And when I say 3 to 4 rate cuts, I mean 75 basis points to one. One cut is equal to a quarter. So if you say 2 cuts, that's a half, etc. So the market is pricing in 3 to 4 cuts. That would put us basically at the zero mark in terms of, where rates are. That basically put us back to zero there. So we'll see what happens there. We've got a very exciting week coming out next week there. All right, let's go over here and talk about some of the stocks here in the markets today. In the Dow, what led the markets today, right? What a great lesson here. Goldman Sachs, JP Morgan, American Express led the markets to the upside. Financials led the markets to the upside. What else led the markets to the upside? Tech. You got Intel back above the 200-day moving average. That's about a 20% gain. A lot of it coming at the end of the day there, but about a 20% gain for Intel. Banks and financials. What did we talk about yesterday? If the markets are going to go up, they can't go up without the banks and financials. You have to have them. Today you had them. They led the way. They were the strongest sectors of the day. There you have it. Great lesson. ExxonMobil down to the bottom of the end of the list, added 2.5% on the day. Still a little bit weak there. And Nike was downgraded, added 1%, almost 2% on the day. It did close off its lows for the day, but it was downgraded at Deutsche Bank from 120 to 80. So they got an $80 price target on it. Deutsche Bank, so that was one of your weaker ones there. In the S&P 500, you got Coty, makeup company, 23% to the upside there. Schwab was higher on the day by 20% as well. Financials, right? Financials doing their thing there. Norwegian Cruise Lines, by the way, it was one of the better performers. They were halted in the middle of the day. It still finished strong. Yeah, still finished strong there. 15% on the day. Was halted because they're temporarily suspending all of their cruises. So that stock was halted. Carnival Cruise was halted as well when that news came out there. On the weak side, you got Newmont Mining below the 200-day moving average. Gold miners, silver, all plummeted today. As the safe haven trade came off and people put money back into the markets. What did we talk about yesterday? Money coming out of the safe areas. You saw it yesterday. We talked about it just trickling in a little bit. Today they came in a little more aggressive there. You also got Mohawk, one of the weaker ones, lost 1% on the day. And Xerox was down, actually finished positive by 0.25%. Those are Carl Icahn comments there. They were helping that one out. All right, sector breakdown here. Your top performing sector of the day. Banks. Now you know how this works. When the markets sell off, you've got some decisions to make. Do you go after the weak stuff? Do you go after the strong stuff? If you decide to go after the strong stuff, you want to look for the stocks in the financials or the tech sector. Those two sectors need to bounce with the market or the market doesn't bounce, right? That's a great lesson there. It was so exciting to watch that today. You got tech stock. Well, let's go back to banks real quick. So in the financials, great recovery. They did recover all of what happened yesterday, so a complete 180 in terms of the financials there. We talked about all of how that works, so we don't need to go through that again. JP Morgan, one of the better performers there. Bank of America, it was widespread, right? 17% rally in Bank of America. Wells Fargo, 13% higher on the day. Really cool to watch that. All right, tech stocks. They recovered everything from yesterday as well. They were the second best performing sector there, adding 11%. You got Oracle higher on the day by 20%. That's going to be earnings related. Oracle beat on earnings by a penny. They're also doing a $15 billion buyback. They're adding $15 billion share buyback. Stock was higher by 20% on the day there. If we look at tech, some of the weaker stuff, although it was up 7%, it was weaker most of the day. Broadcom, that's going to be earnings related as well. They missed on earnings by 11%. They lowered guidance going forward. They're not going to spin off their wireless division and everything. That was a bit of an upset. But still, the sector as a whole got a rally. That one stuck out a little bit to me there. Moving on, you got transports today, erasing all of the intraday activity from yesterday, but not erasing all of the declines from yesterday. 9% lower on the day, or higher on the day. Airlines and rails, mostly airlines and rails. Delta Airlines stuck out there. Southwest Airlines, 15%. Alaska Airlines, 8%. What didn't stick out as much... United Airlines up 11%. American Airlines was one of the weaker ones, only up about 6% on the day. And then your rails, they were also stronger on the day. Norfolk Southern being one of them, 10% there. Union Pacific almost 10% as well. Consumer staples, going over to that sector. Oops, there you go. Consumer staples nearly erasing all of yesterday as well, up 8.5% on the day. Walgreens sticks out. If you're looking at that, it was a great recovery in Walgreens, 12%, one of the standouts in that category. Kraft Heinz, a much needed rally for Kraft Heinz, up 20% on the day. I didn't catch any news on that. It was just higher on the day. Procter & Gamble adding 12% as well. Those are some of your standouts in the consumer staples category there. I mentioned silver. Silver losing 6.3% all the way back to 52-week lows today. Money moving out of that area, moving into tech and financials. Gold, the same thing. It had a great run. Gold's just pulling back a little bit here in the short term. It's an aggressive pullback, but if you're like a long-term holder of gold, this probably didn't change your mind today. Lost 3% on the day, and the reason Newmont was down, gold miners. Look at that drop from $23 nearly to $16, losing 14% on the day. You got to be careful with these safe haven trades there. It's where everybody runs to when they get scared, but as soon as the coast even seems all clear, like late yesterday, money runs out of there, and that is the sign for them to run back to get back to work. Oil was higher by 4.5% in the full session today, the electronic session. It was down most of the day. Check this out. Look at that right there, all in one shot. So oil, less than 5 minutes. How much of a rally was that? 3%? So in less than 5 minutes, oil spiked 5.85% from 5 minutes to that 5 minute window from 245 to 250. That was all President Trump's comments that he sees oil cheaper here and directed the petroleum reserves to go in there and start buying some. He mentioned that in his press conference. That thing took off like crazy. Oil related stuff, your XOPs, your OIHs got much needed bounces today because of that. It all happened late in the day. Well, very late in the day there. All right, individual stocks in the news. Boeing, 9.92% there. This is the worst week for Boeing since before I was born, 1975. Down 50% now from its highs. It did close off the lows just a little bit there. Remember, they drew down their entire credit line. Many companies this week did that. Boeing, Wynn, Hilton Worldwide, they did it, and BlackRock did the same, and they told all of their companies to do the same. So you're going to probably see a little bit more of that. There's some credit concern out there, and so Boeing wrapping up at least with a 10% bounce off lows, with otherwise what was a really rough week for them. Norwegian Cruise Lines, we talked about that already. Added 15% on the day. They're going to cancel their cruises until April 11th. On Norwegian Cruise Lines, and Carnival Cruise Lines did cancel or postpone their Princess Cruise Lines in there as well. Apple in the news today, up 12% on the day. It says they've officially got all their stores reopened in China. That gives you an idea, right? You see how long it took for China to go from chaos to back to normal? That's what we're dealing with here in the States. So you got about another month and 3 weeks to go if you're following along with that. All right, what else do we have? We had less than 1% of the S&P 500. Prior to that last minute rally, we had less than 1% of the S&P 500 above the 50-day moving average. This is the first time since 2011 that has happened. I cannot find any other time in history or after 2011 that's happened. In December 2018, if you're curious, the market sold off. Remember, it was from October, November, December. We sold off to 20%. We didn't end the bull market, but we did sell off there. In December 2018, we hit 1.19%, but we didn't break the 1% mark. Today, we broke the 1% mark there, indicating obviously very oversold area there. The average stock in the S&P is 26% below its 50-day moving average. So if you tuned out this week and you came back and you're like, what? What happened to the market? That's how aggressive it was. Average stock in the S&P is 26% below its 50-day. There are 11 sectors in the S&P 500. 7 of the 11 sectors have 0 stocks above their 50-day moving average at this point. That's impressive. All right, you got 0 new 52-week highs today, 122 new 52-week lows. The record was set yesterday with 336. Some of the worst in the mix, we happen to go over to that, that stayed near the lows of the day. MGM, okay, I mean, it closed a little off the lows, but that one stayed near the lows. Mohawk did come off its lows a little bit, but still at the bottom of the list. And Capri, this is like Michael Kors, Jimmy Choo, Versace. These are the brands inside of Capri. That one finished down 2.8% on the day. Stocks that came off of their lows a little bit. Helmerich Payne was down, finished up 10% on the day, going into the positive there. That's one of them. Booking Holdings, There you go. So closing off 52-week lows with an 11% gain, looking good there. And Mosaic as well, adding 13% on the day. Individual stocks in the news today. You've got Adobe with earnings out. Adobe beat by 3 cents, guided as expected. Revenues came in better than expected, back above the 200-day moving average there. Amazon telling everybody to work from home, 6.5% through. They're telling people to work from home through March, actually, is the deal there. Broadcom, we mentioned already, that's earnings. Big bounce off of the lows there. They did lower guidance going forward. They missed on earnings by 11 cents, and they're not selling their wireless division. That was part of the speculation there. Didn't happen. DocuSign up 12.5%. Good earnings for them. They beat by 7 cents. Revenues as expected. They raised guidance going forward. Everybody was happy with DocuSign. We talked about Oracle already. You got Slack. That's good news that it came off the lows like that. That was looking pretty nasty in the middle of the day there, selling off below lows all the way down to $16. That was pretty tough. They beat by 3 cents. Revenues as expected. They just guided in line. It was just a tough day for them overall. What else do we have? Was it Gap? Gap up 7%. That's going to be earnings related there as well. They beat by 17 cents, raised their guidance going forward. What else do I have for you? I think that's about it. Jabil was in there. Oops. Jabil was in there as far as earnings today. Added about 6%. Not really a big deal there. Not too much to go on. That's pretty much it. I will wrap this thing up, man. What an impressive week. If you had to be watching the markets this week, you had a good time, right? You can't say you didn't have a good time this week, right? Everybody that was following along. We covered a lot of stuff. I'll probably sleep till Monday, but we're all good. I see Bill Gates is stepping down from Microsoft's board, officially walking away there. That's in the news after hours. They're not going to close the stock exchange, by the way. I know that was a question yesterday. Yep. What if you buy a bunch of shares in a stock, you're down to lower your costs, and then you take out your 5,000, either small gain or loss of that smart, just want to average down with the least amount of risk? Well, that's a good lesson as to why we don't go all in on one stock, right? Because now you're kind of banking on one stock killing it or hoping to lower your average cost. I'm not going to tell you to do that, but I know people are doing that out there, given the move that we've had there. Maybe it means that it's a stock that you liked and you weren't going to sell it anyways. You got a little extra money, you're just taking an opportunity at this decline here. But because you said you were going to sell it for a small gain, just that piece, I'm going to bet that you're thinking you're in some kind of trouble there and you're trying to get out of trouble. Yep. We are in a new bear market. That's correct. It is a new bear market. Yep. Laura, what does this do for Roth conversions? I don't know if you're asking me that or what do you mean, what does this do for Roth conversions? It feels like a trap. Okay, some of you think this bounce is a dead cat bounce. I've heard a lot of bigger companies say that if there was a bounce, they were going to use that to reload bets to the downside. We'll see. There's going to be a lot of pressure to the upside. Also imagine the emotion. I mean, I talked to a handful of you today that were like, I'm scared, man. I can't do this anymore, and you're happy to see the markets go up today. But imagine those people when the markets recover, they're going to say, okay, fine, I'll get out a little bit higher. I've talked about that numerous times. You're going to have that pressure on the way up. So this is not going to rally back to new highs. It's just not going to happen. If you have to bet, you have to bet that it's not going to go all the way back to highs as if nothing happened. That'd be wild. That would never have happened before. Yep. Dipped your toe back in today. Awesome. Yep. Did the Fed do overnight repos? They are doing them anyways. They're still doing them till I believe about April 11th or something like that. Somewhere in there, they're going to continue. They added $60 billion to it. Yeah. Oh, yeah. Well, hey, I forgot to mention dividends. You got Digital Realty, $1.12. Ecolabs, 47 cents. Intercontinental Exchange, 30 cents. Western Union, 23 cents. We do own some of those, so you got dividends coming your way if you're in those there. I love it. I love it. Was it a short squeeze into the close? You could argue that some of the volume there was likely short covering going into the weekend where it seems like the dust is starting to settle a little bit. I could buy that. I don't have any way to officially verify that for you, but I could understand that argument. Yep. Unlimited liquidity. No, not this time. They haven't said that yet. They said that in 1987. Infinite liquidity is what they said. Yeah. I like it. We are in for an exciting week next week. Get your rest. Thoughts on Foot Locker? It's one of those second-tier retailers that's been beaten down. Obviously, it started to bounce a little bit today. I don't think you see that one just super recover out of nowhere. So it's not one that I would say you have to go and look at this stock and be a part of it. Yep. Are you bullish or bearish on REITs? Are you bullish or bearish on REITs? So the thing is, every sector is quite oversold here at this point. This sort of, they call it an oversold bounce, right? We just stretch the rubber band a little too far. You can only stretch a rubber band so far before it snaps back. That's what we're seeing here, and it's probably what we'll see for a little bit as people digest all this excitement from this week. Next week is a whole new week. But yeah, I mean, there's a lot of sectors like that. It's hard to say that REITs stood out better than any other sector today. Banks and tech stood out as the best today, but yeah, it's hard to say if it's time to get excited about those again right now. Yep. Well, the way you can tell, by the way, is as everything starts to bounce, some stuff's going to get left behind. The stuff that continues, that's the stuff you bet on that next pullback there. Yep. Disney, man. Oh, frustrating. I saw that going by the scroller on the bottom. I don't think I missed that. How much of a back and forth period before you see high volatility? I think it continues through earnings season. You got earnings 3 weeks from now, so it's not going anywhere anytime soon. Yep. You should expect volatility next week. I would. There is no reason to believe otherwise. You got a Fed meeting next week. You've got all this still going on. You've got oil news still out there. You've now got Trump starting to throw in the trade negotiation talk there now that China's seeming to be back to normal or acting like they're back to normal. So you got a guy that is looking to make his stamp. He's not going to ride into the election just trying to fix the world from this virus. He's going to start moving on. Mark my words. He's going to start moving on to trying to get stuff done, or at least showing that he's trying to get stuff done without, Pelosi or whatever. So that's he started hinting at that today. Yep. Here you go. You're in Florida. You think they're going to cancel WrestleMania? Do we have that here? Is it in town or something? I don't follow that. I don't follow. Record number of people at the beach, I'll give you that. There's no shortage of that. Yep. We will see. Anyways, that's basically what I have for you. I'll wrap it up there. Maybe a little bit shorter today because, man, what a good week, man. It's a good week, so go grab a drink. We'll see you again on Monday. I do appreciate everybody coming by. If I helped you, hit the subscribe button, show some love there, and I'll be back on Monday to keep helping you guys. Enjoy your weekend. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.